Hey everyone, this is Dimitri Pragmatic with MarketChameleon.com. In this video, I wanted to talk about unusual option volume. And before we go into specific stocks, there are usually two questions that come up. One is, what does unusual option volume mean? And then how do you use unusual option volume? So first, let's just take a look at what does it mean, unusual option volume. Every stock has a different amount of contracts that trade on a daily basis. Sometimes one stock on an average day trades 5,000 contracts, and some stocks trade 100,000. So to see what it's unusual, you'd want to get a relative volume on the day. And what I mean by that is, over here you see today's volume in this particular stock is 5,054, and we want to see, is that unusual? So we need to compare it to its average daily volume. So we take, for the last 90 days, we take the average daily volume and then we take the ratio. So here it's 3.4, and that's what the relative volume means. That this is 3.4 times today's volume is 3.4 times the normal or average daily volume in this stock. So then the question is, how do we use the unusual option volume report? And everybody uses it a little bit differently, and you can use it for different things. Now, sometimes you just want to use it for to point something out. You know, what is happening in this stock? Why is this so much more volume than usual? And you'd want to go and just research that, if there's any type of news on the stock, if it's moving, if it's making outsized moves, are there events coming up? And then once you figure that out, you'll go to the options chain and see if there's any type of opportunities that fit your criteria that you like to trade. Another thing that sometimes traders will do is really study the situations, because you learn by observing and studying and seeing that there's an unusual amount of volume in the stock. You learn about the situation going on, and then you want to see how it plays out. Like, I remember when I was in high school and I played chess, one of the things I did was observe how other people played, and I learned from that what type of moves they did, the different moves people did in different situations, and then how things played out. And that's how you get experience, and you're prepared in the future, right? Because the more you observe, the more experience you get, the more you'll be prepared when you see a similar situation, and how do things usually play out in this situation. And then finally, you might want to just go to a specific stock and look for something specific scenario that could create a trading opportunity. So unusual option alone might not tell us as much, so we want to kind of use the filters or use things to narrow down something that we're looking for, a typical type of trade. So let me just give an example here, and I'm going to start using these filters above. And let's say I'm looking for stocks that the implied volatility is elevated. So I'm going to click on this, and this now shows me these are the IV ranks where the implied volatility is elevated in these options. Then I also want to look for example companies that already released their earnings. So I'm going to click just released. So these are companies that have already released their earnings, and that earnings event is over. And I also might want to add where the implied volatility today is down. So now I'm looking at today's implied volatility, and it's coming in. So the idea there is I'm looking for stocks that have already released earnings, and what we know is that once going into earnings, implied volatility increases. After their earnings are announced, usually it decreases because the event is it's over. And in this situation, we're looking for, well, maybe that after the event, the implied volatility or the premiums are still priced relatively expensive, and they're starting to come in, and that we might want to take a look there to see if there's any kind of opportunities around high premium options post earnings event. So I'm going to go now the other way, and let's just take a look at, let's assume, I want to look at healthcare stocks. I want to look where the implied volatility is low, subdued, and I want to look for an upcoming event. So some kind of an event that's about to come up. So in here, so we're looking at, here's a stock, there's unusual option volume, the implied volatility is very low, and they have an event coming up. It's a conference, healthcare conference, and we know that during a healthcare conference, they may reveal something that could make the stock move. So it's kind of looking for this will be the flip side of the other example, where we're looking for potentially cheap options to buy with a potential catalyst to make that stock move. I think so. That's a different type of filter. Or we could take a look at maybe not healthcare stocks, but maybe where things are subdued in low market cap stocks. Let's say under $1 billion. Nothing in that today. But you could see over here that you could start using filters. If you're looking for ETFs only, that implied volatility is elevated, you could use those different filters to look for specific scenarios where you're looking for an opportunity based on that situation. So hopefully this was helpful, everyone, and I'll see you guys in the next video. Bye.